Hello and welcome back to my channel. Thank you so much for being here. In this video, I will walk you through everything you need to know about property taxes. While it is not the most exciting topic, I will admit, it is something that we can't avoid, so the more you know, the easier it is for you to lower your tax liability. Believe me, it is best to be equipped with facts, and this video will be helpful to those of you who are first-time homeowners as well as existing homeowners. By the end of this video, you will know what property taxes are, who sets them, how property taxes are calculated, and so much more. If you have not yet subscribed to my channel, please take a minute now to hit that subscribe button and enable notifications by ringing the bell. First of all, what is a property tax? Property taxes are as old as the world. You might hear people say real estate taxes instead, and essentially these are synonyms. They're the same as property taxes. Property taxes have been used to fund government functions for millennia. The first thing I want you to know is that the IRS has absolutely nothing to do with your property taxes. The IRS has nothing to do with your property taxes, no matter where you're located in the United States. Property taxes are local taxes. Your state's law has the power to do three things. It establishes the process followed by local officials in determining the value of your property, whether it is land or a home. It sets tax rates, and it has the authority to collect taxes. So those are the three main functions. As you can see, your state, your county, and your city are the ones setting your property tax rate. All homeowners pay property taxes. That's just the way it goes. In the United States, there are 6 categories of property taxes, and those categories are based on the type of property that is being taxed and also the method of taxation. While I will remain focused on real estate property taxes in this video, let's quickly run through the most common categories so that you learn as much as possible today. First of all, real property taxes. This is the most common type of property tax. It covers land and permanently attached structures, such as houses and buildings. Typically, your local government, such as counties, municipalities, school districts, assess these taxes, and they are calculated based on the assessment value times the local tax rate. Next up, personal property taxes. Some states also tax personal property, usually business-related property, such as tangible movable assets, not permanently attached to land. Examples of such assets are equipment, machinery, furniture, possibly cars, boats, RVs, effectively anything based on the nature of its use, whether it is used for business purposes or for personal purposes. Next up, vehicle property taxes. Levied annually in some states on the value of motor vehicles, this property tax covers cars, trucks, and the like assets. These special assessment taxes. These are targeted taxes for specific public projects that benefit only certain properties. These projects could be sidewalk repairs, sewer improvements, street lighting. Now let's talk about how property tax works with a focus on real estate. The amount that you pay in property taxes every month is actually determined using your property's value and the city's or the county's tax rate. Obviously, you have no control over either one of those numbers. Those two factors are the most important ones, though. The tax rate depends on two things: the location of the home or the property and the property type, meaning whether it is single family or multifamily. Property valuation takes many factors into consideration, as you can imagine, including the physical structure of your home and the land that it sits on. This value is determined by an assessor who works with your county or your city, with your effectively your local tax authority in most cases, and they keep track of these local property values on an annual basis. How to calculate your property tax? There's no standard property tax rate. They do vary across different cities, across different counties and states. The best method to find out the tax rate that applies to you is by contacting your local city or county. It is perfectly okay if you don't know who to reach out to. I can help you out. To find your county's tax collection agency, you can search by zip code using the Public Records Online Directory. I will share that link in the description below, so you're welcome to use it and hopefully you will find it helpful. I don't know that you will ever need to calculate a property tax yourself, but in case you ever do or you feel compelled to give it a try, it's actually very, very simple. All you need to do is multiply the assessed value of the property, which, as we just discussed, is determined by your local authority, such as your county. Multiply that by the tax rate that, again, is determined by your local taxing authority. For example, if the assessed value of a home is $280,000 and the tax rate is, let's say, 2.1%, it means that the tax that you have to pay on an annual basis is $5,880. One of the biggest questions is probably the following. Okay, so you pay your property taxes, you don't ever miss a payment, but what is property tax actually used for? Property taxes help fund many different community type services such as law enforcement, fire protection, community pools, libraries, city road work, and so many more things. These things affect our daily lives, and very often we don't realize that the money that we earn and subsequently pay in taxes actually funds various community, local, and neighborhood amenities. How to pay property taxes? Typically, you pay your property tax when you make your monthly mortgage payment. The amount that you pay monthly isn't actually sent to your local county or the city right away. Instead, it is transferred to an escrow account. And so from that account, from that escrow account, your lender makes the payment. Typically, they do that once a year when that payment is due. If you want to, you have an option to make tax payments once a year or twice a year. But this option isn't something that you typically see, and it is available, of course, only to certain types of mortgage loans. USDA and FHA loans actually require taxes to be escrowed, so you'll never see that as an option. VA loans require a borrower to gain at least 10% equity before removing escrow, and conventional loans ask for a 20% equity before removing that escrow requirement. Very often you will hear the term property tax exemption, so let's talk about those next. Tax exemptions decrease the amount that you have to pay in property taxes. Tax exemptions actually do have to do with the IRS. You're going to have to qualify for a property tax exemption, which will help you lower your property tax liability. The most popular tax exemption is the Homestead exemption that you can only claim on your primary residence. This is not something that you can claim on a rental that you, for example, own. There are tax exemptions that are available for veterans and seniors as well. You will still pay property taxes, but just not as much. Since we started talking about taxes, some of you may be questioning if you can deduct your property taxes on your federal tax return. State and local taxes have traditionally been deductible in full from federal income tax, but there is a cap that is adjusted fairly frequently, typically on an annual basis. So you may only be able to deduct property taxes up to a certain amount that changes every year based on the IRS guidelines. You can learn more about that cap that is applicable to any tax year on the IRS website. I will link that below for you. As you already know, you can't really choose not to pay your property taxes. If you don't pay, your local tax authority actually has the power to place a tax lien on your home, on your property. So when there is a tax lien on your home, let's say, the creditors, in this case your mortgage lender, they will immediately be notified. And of course, at that point, the government has a legal right to your home. Of course, your bank is not going to like that, and if you still fail to pay after that, if you fail to make those payments, the tax lien can become a levy, which means that the government can seize your property to satisfy the debt, meaning they will sell the home and they will pay off any outstanding mortgage debt from the proceeds of that sale. As you can see, your property taxes are ongoing expenses that can't be avoided as a homeowner. If you want more details about property taxes, let me know in the comments below. Leave me a comment. I would love to hear from you. Remember to subscribe to my channel. It is available both on YouTube and on Rumble. And also make sure that you give this video a like if you learned something new from it. Thank you very much for joining me, and I will see you back here soon.